What's up, guys? I'm Chris Conlon, your home lending guru based out of California, and we are going to get into a really good one today. All right, so this is a hot topic. So we've got the adjustable rate mortgage versus the fixed rate mortgage. Now, there is a lot of stuff going on in this video, and we're going to break each one of those down. All right, so let's actually break down an adjustable. So you've got the 5-year, 7-year, and 10-year. Now, there are some other products that are out in the marketplace that are pretty exotic and sometimes like 15-year fixed. These are typically offered at different lenders, but for this video, let's talk about the 5-year, 7-year, and 10-year. All right, so what does adjustable actually really mean? So when you hear 5-year, 7-year, or 10-year adjustable, what does that truly mean? Now, 5-year, that's gonna be a 5-year fixed rate for that introductory period. Now, after the 5 years, it does adjust, and what that means is your interest rate will adjust. So 7 years, just like the 5-year, it's going to be fixed for 7 years. Same with the 10-year. Now, after that introductory period, you're going to have an adjustable rate, meaning that your rate can change over time. Okay, so the question is, how does my rate actually start to adjust? Is it every year upon every year? Well, yes, the answer is pretty simple. After that 5-year or 7-year or 10-year introductory period, your loan is going to start changing every year, meaning the interest rate will change to what the market rate is based upon what's called an index.
Oh, sweet. I get to actually change my interest rate year over year?
No. That does not mean that you get to change the interest rate. That means that your interest rate will go to what the market is currently after the rate adjusts. That means that every year you'll get a new disclosure with a new interest rate. Now, is this a good thing or a bad thing? That certainly just depends on what you're trying to achieve. Do you move a lot? Do you plan on being in the home? Do you plan on selling in the near future? Those are the questions that we'll get into. So some of the pros with the adjustable rate mortgage are going to be with the competitive interest rates. Typically, they are more competitive when it comes to the interest rates. And second, you've also got a shorter term. So you've got a 5-year, 7-year, and a 10-year. Now, some of the clients that I would probably recommend an adjustable rate mortgage for would be if they are planning on moving anytime soon. The next would be if they are traveling with their job. Third would be if they are looking to grow their family over time. And the fourth would probably be if they are planning on selling anytime soon. Now, if you fall into any one of those categories, looking at an adjustable rate mortgage is probably an option that you would really want to consider. All right, so you gotta be careful. Now, you really wanna make sure that you are in one of those categories that we discussed earlier in the video, because you were truly opening yourself up to, if the market changes significantly after those introductory periods, you're going with what the market rate. And if it's too high, your payment's gonna go up. So back in 2007, these loans were super popular because the interest rates were so much lower. Now, we went through the financial crash in 2008 and interest rates spiked.
Let's talk about the speed with which we are watching this market deteriorate. We're down over 16%.
Dow at the same time has fallen about 18%. The stock market is now down 21%.
For the people that had those adjustables, they saw their payments skyrocket. And this is where we had so many foreclosures happen over that time period. Now, I don't want to sound like a broken record, but you really want to make sure that you fit into one of those categories that we talked about. Now, imagine this. You're in this home and you think that you are going to have a family, you were building a family, and you opted to get the 10-year fixed. Now, let's just say 15 years goes by, you don't even have a girlfriend, you're living that bachelor life, and you've got a payment that skyrocketed. Now, after that 10-year introductory period, you are going to go to a fully amortized 20-year payment. Now, imagine on a $700,000 loan, your payment goes from $4,200 a month up to about $5,400 a month. Now, can you imagine how much interest you'd have paid? Okay, so now don't forget, now during this time period, 5, 7, and 10 years, that is typically a long time when it comes to mortgage interest rates. Now, you can always refinance out of your loan if rates go lower, and even if rates are going higher, you can always refinance out of it. Remember, you are not stuck. If you are starting to see rates go lower, even if you see a house that you really want to buy and you want to sell this one, we can always get out of this transaction and get you into something that fits you better. Now, I don't want to completely scare you about adjustable rate mortgages. There are some times where this works out really, really well. Think about our clients that were in 2020 and 2021 that had an adjustable rate mortgage. They got to ride that train all the way down with low mortgage interest rates. Now, there are way more options other than a fixed versus an adjustable And this is something that you really want to get with a mortgage professional and go through what really works for you. Now, there's a lot of data that goes into trying to figure out the product and pricing. You've got to look at your 10-year treasury, you've got to look at your mortgage-backed securities, but there's a lot of things that go into that recipe when it comes to creating the right loan and the right loan options for our clients. Now, I've been doing this for 20 years and adjustable rate mortgages have truly been a great tool for a lot of my clients. Now, remember, I am in California and I deal with a huge variety of clients and very specific needs. Now, remember, you need to fit into one of these categories that we talked about at the beginning of the video, because that will really set you up for success if an adjustable is the right fit. Now, if I've given you value and I've broken down what an adjustable rate mortgage versus a fixed rate mortgage, do me a huge favor. You know that like button like this, hit that. If you know somebody that may find some value in this video, please share it with them. And then again, do me a huge favor and hit that subscribe button. Now, I will be breaking down everything mortgage related and help you truly understand what this all means in very easy to understand terms.